And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good afternoon, friends and traders. Welcome to the market recap and this week's recording of the Limit Up podcast. I'm Dan Hodgman, sitting down with, you guessed it, Jack Pelzer. Jack, how you doing?
I'm here. It's been a hell of a day today on Thursday. Has not it been? The NQ is up, close to 300. Now it's down 230. That is a big range.
Huge turnaround here. And I want to talk about NQ a little bit. One of the things you want to look for in market state, right? You see this market like NQ coming up today or S&Ps, right? You got a strong open, markets pushing higher. And a lot of times you think right off the open, if it starts making that direction, look for direction to continue. But if you open up your time frame that you look at these markets, we didn't make a new high in either of them. All it was a simple little bit of strength and downtrend. So we see our trend moving lower.
Well, I was in the trading foundation class today, so I didn't get a chance to look at the news. Was there any news on this?
To be honest with you, Jack, I don't know.
Yeah, we're in the bunker right now, so to speak. There might have been some news component to it. One thing I would say, though, is this is why it's so important to zoom out on your charts, right? I mean, the NQ's been getting shellacked a little bit for the last couple of weeks. But when you zoom out that chart, look at the daily chart and zoom out, it is on quite the run still. So, everyone talks about buy the dip and stuff. I think you just got to be careful here, right? I mean,
it's a matter of patience. But I will say this, we're getting close to that 10% mark in the NASDAQ as we continue this push lower, that 10% from November. I think it was November was the last time we saw highs in the NQ. We're getting pretty darn close to 10% there. And if we hit that, it's something, that could be an inflection point, right? What is an inflection point? It's where I think today's theme, we're going to talk a lot about stops.
Yeah.
And grand scheme of things, inflection points where you can get in on a pretty opportunistic trade and you can look for keeping those stops pretty darn tight to take trades.
I mean, today's a great day to be talking about stops. We're going to go into a few different ways of it. This isn't going to be just like how to set your basic stop, right? We're going to go into it a little bit. And especially when we see we've been in a long uptrend with a lot of the equities, might be a good time to know what you're doing with your stops if you can't just ride that trend all the time. So we'll get into that shortly. Dan, was there anything else you want to go into with the market today?
No, not really. I think, you got crude oil. Finally, we saw crude oil yesterday break off of 86.50. You got that again today. So 86.50 already 2 days in. We haven't been up to these prices in a while. And now we're starting to see some rejection at 86.50. So I think that's worth noting. We're going to close the day here below $85. Equities, you know what? There's a lot going on, as I just glance at a couple things that I think are going to start to show some concerns. Take Peloton. Peloton was a huge company 2 years ago. Everyone bought one. I bought one. Half my family has one. Half my friends have the bikes. That stock was well over $100. Now it's down by about $25 a share there. And now they're even announced.
How about Robinhood? Robinhood high in the 80s right now as we speak. Robinhood 1371.
1371. Well, Peloton just came out and said they're halting production. Like, demand is that low that they're going to stop creating bikes for Peloton.
Well, all those companies, like you see, and I'm not making any judgment calls on what these companies' business models are, but you see things like Casper, the mattress company, doing the same thing as Peloton, where, the joke with Peloton is, well, is this just a spinning cycle with an iPad on it that is paid for more? Yes, but then you see that they try and go out and branch out into different things. So they sell classes and other things and try and get you into a subscription model, which companies love because that's cash flow for the future. But Casper's doing the same thing where they're like the sleep company and trying to go beyond mattresses. They're all trying to expand out like that. And it's not always clear if that's going to work. So buckle up, set your stops.
Set your stops. I think you have to, which I think you bring up an interesting point, Jack, which I think is worth noting too. When you look at companies like this, and right now, the way the world is going, you and I were sitting here in a Zoom call. We're doing everything fully remote. Everything is kind of, in a sense, teched out. Everyone's looking at tech. That's where, hey, can I do this remotely? How can I get my workouts in? How can I, get the app that goes along with it? Whether, everyone, meditation, which I think is a huge thing for trading. I know when I first got into trading, my dad used to tell me all the time, hey, you got to start doing yoga. It's great for your head game. Helps you de-stress. It creates a little meditation in your life. Go start doing yoga every day after you work. I'm like, Dad, you're crazy. I'm not going to do yoga. I have no interest in that. As I've learned, meditation is pretty important. But now, you can pull up your phone, you can grab your phone, and you can kind of get all these services. And that's where you're seeing a lot of these companies. Hey, if we can create some sort of app-based subscription, we're going to be set for life.
Yeah, if we can bottle and sell mindfulness, we're all going to be rich. That is the thinking there. So yeah, might as well dig into it here with stops. So like, first off, if you're trading out there and you're not setting stops, now I don't have the data for that for Top Step. I've seen other firms release it, and some absurd number of traders don't use stops. You should be using stops. If you're not, why? I don't have an answer to it, but it's funny when we see traders come to classes or ask their questions. It's always, I want practical things of how I can improve my trading, and like some number, like half of them aren't using stops. So there's something you can do.
All right, I'm gonna play a little bit of both sides here, Jack. Historically, I'm not a trader that uses stops. I know where my stop is, and I'm not walking away from the computer without a stop, and I have a discipline to get out when I get to my point. I'm a big order flows trader, right? That's important to me. So I do have, you can call it a dynamic stop. I do have a catastrophic stop on every trade I put in. There is a catastrophe point where like I have an out, like I don't have to worry about, like it'll get me out. I don't ever wait for that catastrophic stop. And when I say catastrophic stop, it's not like my losses are 5 times what I expect my rewards. It's closer to a 1-to-1 type thing. That to me is catastrophic stop. If my risk is equivalent to my reward, you better get me the hell out. But most my stops when the market goes against me are manually input, where I am choosing to hit that stop button on my own.
See, I think that's fine if you have the discipline, but you have some kind of mechanical stop in there so that if you have to use the restroom or something, you're not putting at risk, World War III starting or something, right?
Oh, for sure. I mean,
yeah,
I've gotten pretty good at holding it if I got to use the restroom, if I'm in a trade. Now, granted, I'm not one of the traders that's going to do 30 or 40 trades in a day. That's not my style. I have no interest in trading that much. I think when you start getting that high, you really toe this line of, hey, I'm pushing the gambling edge of my trading, right? Like that. So I'm very cautious about that. So I'm not in trades, or I'm not in, the beginning of a trade. Now, if I'm in a trade and it's going in my favor, I can tell you this, of 2 trades I took today, each one was well over 2 hours. I'm sitting in them and I can be patient. I can let them go. I do have my catastrophic stop. If for some crazy reason, if something happens, I can get up and walk away. But I think you have to have stops. I know we have more to talk about, but there's one thing that I talked to a trader yesterday or this morning. I can't even remember when. And we were just kind of talking about our trading because, I saw yesterday an astronomical number of trades. It was something like 450 trades in a day.
Yowzer.
And I'm looking a little bit deeper into what we got going on. I'm like, this is a lot of trading. Number one, Is your finger like, do you have like a brace on your finger clicking on the mouse that many times, or your hotkeys on your keyboard?
Got one of those flamencos that just goes like this, like Homer
Right?
Simpson. Yeah, just
Or exactly. That's kind of was my thought. And she said to me, she goes, well, no, I trade an NQ and I have an 8-tick stop. I go, 8 ticks. I go,
jeez.
8 ticks. Like I blink and we've moved 8 ticks. I've got a NASDAQ dome up right now. And as I blink, we're moving that and we're on the close. You know what I mean? Like,
You're really
those are
putting yourself in
things-
the noise zone there, right? You're not getting much signal in the trade one way or another. That's way too tight. So we've established that it is important, A, to have a stop. Now, I think that's where a lot of people sometimes end it, which isn't great either, because there's, find joy. Everyone thinks about picking levels. People don't think about picking stops as much. And you should find just as much joy in that, because that's something that's really going to help you as a trader. So what I say about like basic, it's like the 8-tick stops thing. So the most basic kind of stop would be like you pick some amount of money you want to lose the maximum amount on a trade or ticks, and you just set that in, like that example there. Like, I'm either going to make 400, I'm going to lose 200. Now, I would argue that the market does not care about your preference for how much money you lose or stuff like that. I would say that is maybe better than no stop, but at the same time, it's not the smartest way. As Hogue would say, the best way to set a simple stop, if you're just going to one stock stop, is based on market-based information. So just like you would set your entry based on your research, the indicators you're looking at, have another point that will serve as your stop, a point of invalidation, as we would say. Is that sounds kind of like what you've been doing to an extent, Dan? Would that be correct?
It's usually one of like the first things I teach a newer trader when it comes to setting stops. A lot of times we get into this industry and it's a matter of, what's the best way to put this? It's a matter of like understanding what your risk is, or what your appetite for risk is, versus what the market's going to let you kind of work through. So one of the biggest things when it comes to placing a stop is, I think a lot of people, let's just say you've got, $2,000 of risk. You're in the combine, you're in a 50K, you can trade up, you have $2,000 of total risk in that account.
Mhm.
Obviously you don't want to risk that in your trade, but you want to kind of set yourself up for success. So a lot of times, I'll tell a trader, like, let's think this through. Let's say, we're going to risk $200 in a given trade. All right. Like that's your max risk point in a trade is $200. Beyond that, I can't really, it's not a reasonable trade for someone, in that system. So what you really have to do is you got to find, where does my appetite for risk meet with what the market says is that point of invalidation. If the market's trading $350 from that trade, yeah, you can say, hey, here's a trade opportunity, but it doesn't meet my appetite for risk. And so you've got to think that through. I have to see this market actually start getting closer to that invalidation before I can take this trade, other than, well, I'm going to take it, and let's hope it goes in my favor, because I can only really afford a $200 risk on this trade, which I think happens more often than anyone wants to admit. But those are the thought processes you've got to kind of go through as a trader, is understanding what's your appetite for risk, and then how can I take this trade to fit both?
Yes. Yeah, I think that's a good point. So I want to introduce one other type of stop before we get to, so the two broad categories of stop would be your initial stop, which we're talking about now, which is the stop that you put on right when you initiate a trade that you're going to get out. The other main category is trailing stops, which we'll get to next. But first, I want to introduce the idea of a time-based stop. Now, I wrote in the notes for the show that this is probably most in options. If you're trading options, this would be probably a more common way to do it, right? Because if you're long options, there's a time premium that's going to evaporate at a rapidly increasing rate once you get beyond a certain time. So you might have a stop on a position where you're either going to roll it or get out of it 2 weeks, 2 months, whatever it is. That's your strategy before expiration. But I think the concept of that not the time stuff, not the decay, applies to futures too, where if not a hard stop, you should reevaluate the trades you're in based on time. If you're sitting in a trade forever and you didn't really mean to, you got to keep evaluating the market state and see if the hypothesis you had for getting in is still true. And if it's not, I feel like you have the discipline to get out and use that capital elsewhere. Is that something that you practice, Dan, or are you
Yeah, I mean, I'm huge on time stops. I think, you have to, I do it on every trade, right? Like there's a point where I need this trade to go in my favor. If it's not going in my favor in a certain amount of time, then I'll get out of it. You've got different scenarios. If you see range bound, and you're just seeing that market hold a level, sure, you can sit in that all day long. If you're looking on the flip side of that and saying, okay, I'm looking for this thing to break out of the range and we'll see a breakout, those are the types of trades that you need to see go in your favor rather quickly. If you don't see it in your favor rather quickly, you got to be quick to get out and say, hey, this one might not be the move. All right, I'm going to shut this one off. But I think every trade you get into, you should have a time frame in your head about how long you want to see it take to get to your profit. So every trade that you're going to get in, you want to look at it and go, okay, I see the market trading, let's look at crude oil. I see the market trading 86.50 on our open. I want to see this market start to roll back inside and possibly work its way down to settlement price. That's what I would love to see. I think it makes sense. That's going to be the trade I'm going to look for. If that's how you're going to look at this, you want to see that market start to make that move or reversion back to settles rather quickly. If it doesn't, so today we saw it move at 86.50. We traded just above it. You got a great opportunity for an entry point. But the problem is that market shot all the way up to 87.10 before we started making the move down to settles. You want to be able to say, hey, I'm looking for the short here to start breaking inside. But as soon as it starts creeping higher, you got to recognize that, okay, hey, it's not paying me right away. I got to get out.
Yeah, absolutely. So think about the time, think about your trading like a business is something we say a lot. And that means using your capital efficiently, right? Just don't sit in something, not doing anything. Maybe there's another opportunity elsewhere. So maybe at some point I'll try and share my screen here. I know we're doing this for an audio medium too. I might, we'll see. So I want to move on to trailing stops. I think this is where a lot of people get kind of caught up and see a lot of problems of how do I do it? When do I do it? I do it too aggressively. And I think the same things we talked about before apply to trailing stops too. So, hey, Sarge.
Doorbell rang. Dog has to go be Mr. Protective.
Of course. So, like we said, the sort of the least sophisticated form of trailing stop would be if you just literally trailed it by a number of ticks or a number of money, right?
Yeah,
just take the same concept we did before and just be like 8 ticks. If it goes 10 ticks in your favor, now you've moved it 2 ticks ahead.
Yeah, I think anything that your platform says, here's a way to input a trailing stop is not a trailing stop you want to use.
Yes. So you could also do that maybe slightly more sophisticated with a percent, like you're not going to give away more than 1%, but I still think that falls into the concept of the market doesn't care about your situation. And you might still want to be looking at things that are market-based levels or looking for where you can trail it, but where's your point of invalidation? So, for example, someone was asking us last week, I think on the podcast about ATR, like average true range stuff.
Mm-hmm.
That plays into if you want to do something like a volatility-based stop, right? So the average true range is a moving average of basically like if you run a daily chart, it's X number of periods of the range, right? So right now I have it pulled up for, the NQs at 14,794, which by the way, I think it is down 10% from the highs.
I think we're close to it. I know I had a number somewhere around here, but if you could see the part of my desk that's off camera, you would understand that it's probably buried somewhere.
Yeah, we're through if I'm reading my chart right, the 200-day moving average on this move.
I think so.
That's no fun. But anyway, so like the average, we're as basically it's a volatility measure where it will increase if there's been more volatility in the last days. So like right now, the average true range for the NQ is 360. So I have it on a 14-day. So it's had an average of a 360 point top to bottom move over those days. So you could do it over any period, I suppose. And the idea with that would be that you take some multiple of the ATR if you're sitting in a trade for a while and have that be your stop. And I think that something like that is at least more of a market-based approach where you're saying that if it's outside this range, something has changed and it's time to get out. And there's a million ways to do this. I just thought that would be one easy example.
Yeah.
How do you deal with trailing stops, Dan?
So trailing stops to me, and most everyone knows I'm a levels guy. I love levels. That's how I'm going to move my stops up. If I'm going to move a stop, really the only reason I'm ever going to move a stop is strictly because I saw momentum continuing. I actually pulled my profit target out. We blew through that, and then I'll move my stop to that point. So prime example today, NASDAQ. I went short at 15,150. I'm looking for that market to close the gap to settlement price. Settlement price is 1533. Like, that's a pretty damn good trade right there. 117 points. I will take that. I'll be pretty happy with it. As I started watching this market start to approach settlement price, I lifted my profit target and I said, I like momentum. I like order flow here. I think we're going to move right through. I lifted it. Once we moved through there, and we showed a little bit of acceptance, which we talked about yesterday on the recap. If you didn't see it, recap on January 19th, I kind of talked about a little bit about this idea of acceptance around levels. I started to see some acceptance. Once I saw that acceptance, I placed a stop now at my original profit target, because that's where I'm happy if I'm making that kind of money. And the second that market comes right back up to it and stops me out, I'm not upset because I made the money I wanted to in the trade. But then I was able to let that thing go until about 13 minutes ago. So it just continues to move right through. So you've got to think about that too. Like, to me, if you're taking a trade, if you're in the money at any given point in the trade, but short of where you believe that profit target is, I don't see the justification to ever want to limit your profit on a reasonably thought out trade. Now, if you don't trust yourself, I think that's when these trailing stops come into play. It's like, hey, I got lucky. I'm in the money. I can't give up any of this money. I'm just going to keep following it up to ensure I lock this in. I think if that's your mentality, hey, bring it back to the drawing board. Let's readjust this strategy. But if you're confident in your strategy and your execution, trailing stops or something you don't really need to worry about unless you're looking bigger time frame and you're trying to catch larger moves.
Yeah, especially in trend trading, it becomes very important to have something like that, because you don't want to let, something's way in your favor over weeks. You don't want to be giving that all away. You brought up an important point, though, and I am trying to pick my mind for what it was. You said something that I really wanted to mention. Oh, it's psychological. And what you mentioned with people moving their trailing or trying to get out of, they have a profit target and trying to get out of it early. That would be fine, except generally nobody ever does that when they're losing money. So that's a psychological thing, right? So people are perfectly willing to bail short of their profit target or nowhere near it, like say, oh, never mind it. But they rarely do that with their losses. They'll ride that. Sure. They'll ride that until the stop loss every time, or keep moving that stop loss further back. It's just psychological.
There's the idea of, I've heard this from so many different people over the years. It's, you're walking down the street and you see $100 bill on the ground. You're not going to walk past it. If you make $100 in a trade, you don't want to give that up. The difference between trading and walking past $100 bill on the street is trading is, if you're looking to lock in $100 bills, you're going to struggle. If you're walking on the street, you're not passing, you're picking it up and going, hell yeah, I got $100. So I'm going to go spend this on. Trading, you can't have that mentality because you're capping unlimited potential. So you have to be willing to say, hey, I'm not picking up this $100 bill because around the corner, there might be $1,000 bill. Not
Yeah.
that I've ever seen $1,000 bill, or I don't even think they make them, but that's just the thought you have to have in trading. You have to get rid of the human nature of passing up $100 bill on the ground. And it's hard.
Yeah, if you're in some big, Hogue told that story today in the Trading Foundation classes, although because he was using the idea of exactly there's something further down the street. You also have to be comfortable, like if you're taking trend trades for a long time and running a trailing stop, to make money in the long term, you have to be comfortable with the idea that you're not going to get out at the top, that what you see on your P&L monitor, like whatever the best thing it says while you're in that trade is not going to be what you get out with. But in the long term, you're going to hold on to winners a whole lot longer with that and be way better off. So I psychological.
I see it. We've had a ton of comments coming, guys. I appreciate it. I don't know if we'll be able to get to everything, but I'm trying to glance at them as they come through. And Frozen Gumwad, great name, Frozen Gumwad, brings up a really interesting point. I've been trying to keep my losses tighter while trading, but when I do, I usually get wicked out most of the time. There's a point in trading that is too tight of a stop.
Trade smaller,
but also think about if you're, it goes back to the concept of 8 ticks in the NASDAQ. If you're only going to risk 8 ticks or $40 in a trade, you're making things so tight on yourself. It's really tough, open things up a little bit. I'm a big proponent of, if I'm only going to risk, let's use 400 as an example, based off 8 ticks, and we're talking NASDAQ, right? So
yeah,
400 is going to be your number. You're willing to take 8 losers before you're done for the day. Everyone's totally different. I'm using simple numbers here for explanation's sake. If you're going to risk $40, if your risk is $40 or 8 ticks per trade, I would say, hey, let's open this up. Let's not risk 8 ticks. Let's think about risking 20 ticks, right? At 20 ticks, you got $100. You've opened yourself up. You've got a little breathing room. You got to give yourself some breathing room. I understand keeping stops tight. So I would say, instead of trying to make more trades and keeping your stops tighter, limit the number of trades you're willing to take. Focus on the key setup that you believe is going to be the most profitable, opening up that risk a little bit. I know it sounds crazy. Open it up, give yourself risk. But you got to find that happy balance, I think, in certain products. If you're in NASDAQ and you're trying to keep your risk really tight, it goes back to the concept, elasticity. NASDAQ is an elastic son of a gun. It'll rip through levels. Go look at the S&Ps. I freaking love the S&Ps. Levels hold. Look at the move this morning in the S&P. They rallied right up to yesterday's point of control consolidation area, value area high. That's where that move today moved to, rejected by a tick or two, rotated back inside. Bam, I'm running with a 4-tick stop, taking a trade all the way down to settlement price. I'm seeing huge returns on a trade like that. NASDAQ, it's going to snap through $300 or $400 at those prices before you get that return. So I think a lot of people think we're trading NASDAQ because it's a cheaper product. You're actually having a lot more risk in that product because levels are so elastic and willing to move through.
Yeah, there's a lot more noise.
Exactly. Yeah. So things to think about. So if you're keeping those stops tight, you're working on that, fully support it. Think about the product that you're doing it in.
Any other comments real quick, Dan? Because I'm going to have to run in a few here.
Yeah, we got a ton of comments. I want to, give a shout out to everyone. Quantumous Trading, he's not far from us, Jack, in Lombard, Illinois. So good to see you.
Enchanted
Frederico.
Castle.
Yes. We got Frederico, Brody, Nemo, Norman. Good to see you guys. Here's a great question from Norman. Have you ever heard of buying or selling into people's stops or hunting stops? Absolutely. That's always been a thing. A lot of algorithms are just looking for where the volume's sitting at and how do we push markets to those prices. Autoclist, good to see you. Mental stops. Absolutely. You got to have, you can have both in there. Devant. Yeah. Time-based stops always help. Charles, good to see you. Captain Price, I got a ton of comments from you guys. list goes on. I will say this: if we don't ever get to your questions here, you can always come find me on the recap. The recap every afternoon. I'm here, happy to take those questions. And John's in every morning, 7:45 a.m. Central Time with the forecast. And then don't forget Coach's Playbook. You get to see more of Jack there every Tuesday at 11:30. So if we don't always get to your comments here, we've got a lot of places. Please don't hesitate to comment. Bring those questions in.
Yeah. And usually just today I have to run to something else, but usually stick around a little longer if possible. So, well, Dan, thanks for talking stops with me before I ride off into the sunset.
Absolutely. I enjoy stops. They're a fun thing. And, talking about stops, I hope anyone that was long NASDAQ going into the close had a stop in, because still going. So awesome, Jack. Well, we'll see you this time next week here for Limit Up.
Awesome. We'll see you, as they say all the time at the end of the podcast. You guys probably haven't heard that much. Namaste and trade.